You were a bear in 2023. Are you starting off this year with any bullishness in you?
Stuart, I am. We've been talking about buying this first quarter dip that we were anticipating as the market got overextended. And so there's some areas that we are absolutely going to be buying. India continues to be our biggest conviction that we currently still own. We will be buying that on dips. My team pointed out yesterday, over the last 6 months, it has outperformed the NASDAQ and the SPY. We just haven't had dips to really buy a lot more. We also own a little minimum position in energy. We will be looking for places there later on in the quarter. And then we're going to be looking to add small caps. We don't currently have any small cap exposure right now for clients. But if this market's going to broaden out after we get through the first quarter, I think you're going to see the names that did not work last year are going to continue to broaden out. And those will be the areas that we're dollar cost averaging into. But the biggest area that we're excited about for clients that are retired are the dividend plays. We're seeing 6 to 8 to 9% yields on holdings right now. And so we're going to start laddering those in. If you can create a cash flowing strategy and assets that have nice upside, it can buffer a lot of volatility because there's going to be lots of twists and turns this year for sure.
Everyone's waiting for a Fed rate cut. When do you think we're going to get one? Spring, April, March? When do you think?
I know a lot of people are pricing in March. I don't see a cut in March unless we're in a recession. I mean, why would they cut if inflation's coming down and everything seems stable economically? So I think we're going to get a cut in late spring, early summer, unless the economy falls off of a cliff. And look, all the holdings we talked about that we're going to be buying, we've told our clients, there's going to be on a very short leash because the Fed is now on a tightrope. The market's pricing in 3 cuts. If they don't deliver on 3 cuts, you're going to see rates come back up, and that's not going to be good for risk assets. So you got to have your head on a swivel and be very dynamic in the way you manage assets this year. You're
still not a Super Bowl, are you? Well, don't answer the question. You're not a Super Bowl. There you go. Eddie Ghabour, always a pleasure having you up. We'll see you again real soon. Thanks, Eddie.